Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today I just wanted to go over the continued dump that we've been having on the Bitcoin chart. Of course, some people were just laughing at me when I was suggesting way up here, and in fact, back here, that we wouldn't really be able to penetrate this zone and that most likely we were going to get a very hard rejection over here around 47 to $48,000. I was calling that way back here and saying we're entering that dangerous area. You guys better be ready to take your profits. Of course, more grounded, principled traders who aren't using theory, but they're just looking at the market structure, which is totally reasonable. That's the right way to do it. We're looking at the structure and saying to get out either here or here, depending upon their risk tolerance. Of course, we can definitely understand why with the history of Bitcoin's pattern, where you have these kind of lower highs in this type of a formation, or if you break the neckline of the head of this type of a formation, then most likely you are going to fall down. But the difference is that I was calling it way back here based upon various fib channels that I had marked out, where you can see hard rejection, and then finally it took a long time for acceptance. Hard rejection took a long time for acceptance, and we were just coming up to one of those very hard rejection zones. And of course, we also had horizontal fibs and other resistances and confluences, which would suggest, even from back here, that you could tell this was going to be a very difficult area to get through, and that we would have to pass through it to have any sense of bullishness. But of course, that was not to be, and we're still being rejected off of that fib channel. I know that other people, want to make this or that theory, but let's just look very clearly that the behavior of these fib channels, and it's absolutely part of the equation. Not sure why that is. It may be just the bots. It may be the big money has just tied everything to the stock market, and the stock market has these fib channels. But once you see these things, you can't unsee them. And when you look for these, algorithmic calculations in the market, pardon me, just taking a sip of coffee. When you look for these algorithmic, points in the market, it just shows you how everything is tied together by algorithms and bots these days, because the economy is just too complex, and the people, the market makers, the big players, they can't manage all of it without the assistance of some type of logic and just fibs and things like EMAs. They're all tied to it. And of course, also these traditional patterns. And so some people really laughed at me when I suggested that the stock market looked like it was putting in a Wyckoff pattern. Of course, back then you couldn't see the Wyckoff pattern, it was just an upthrust. And people said, oh, that's really bullish. Like, why would you be calling some type of negative Wyckoff pattern? Like, we have a bullish scenario here. And my friend Athena, she pointed out, hey Sky, like it's also showing up on Bitcoin. If we use your chart and we put it underneath Bitcoin, it lines up perfectly with what you're saying. And sure enough, clear as day, we can see that this is very clearly a Wyckoff redistribution schematic. I mean, there's absolutely no doubt about it. And we were talking about this, I mean, I was talking about this on the stock market when we had this upthrust, that this was most likely the Wyckoff upthrust. You see UTAD, that's upthrust UT, right? And so then I told you guys, sorry about that, just a little congested today. I told you guys, watch out for a sign of weakness in this area, because if we have that sign of weakness, we have just passed this LP, that last point, right? That last point of supply, and of course we would now be looking for signs of weakness. And that would most likely kickstart a markdown, which is what we've been basically battling, and we don't know how long that markdown could go for. That markdown could be considerably longer and considerably more dramatic than you might expect. So as we go forward, you do want to take all of your precautions and make sure that you have your portfolios in a good place, because this could be a wild ride. And I just can't help but pointing out that this is 100% confirmed. And although it was none of my friends who were laughing, there were people laughing quite hard at the concept that this might be a Wyckoff redistribution and not likely an accumulation schematic, but rather a redistribution schematic, and that there could be further downside. So, without further ado, let's go ahead and just take a look at stocks, and I'll show you why I think this may actually still be the case. Now let's go ahead and jump over to the NAS 100. And as you can see, the NAS 100 is already breaking these levels. I mean, this thing has basically just decimated level after level, and I've had to turn them all red as we've been going down, and we're pretty much out of levels here. I mean, we've got no more levels to give, right? I really would expect, unless we have some type of God candle or something, that the NAS 100 is going to work its way down to 1200 or 12,000. And then if we fail to hold there, then most likely in this 11,000 area, which could possibly be some support with maybe a wick even lower. And so that 10 to 15% drop, it's already been initiated, right? So we've already come down, 2.5%. And, I could just potentially see us, falling lower and ending up somewhere around here. So just keep that in mind, because whatever happens in stocks often happens at a 2x on Bitcoin. And while that isn't always the case, and you do have to consider that Bitcoin has already fallen considerably more than stocks. So if we just were to get our measuring tool, we could see that Bitcoin has fallen, 50% already. Whereas stocks, specifically the NAS 100 here, has fallen, 26, 26%. So that's why I say there's a 2x factor on Bitcoin, right? However, the question is, does Bitcoin front load its falling, and does it slow as it reaches the bottom compared to the stock market? I would argue that it's most likely not going to do that, and that we'll find that there will be just certain levels of Bitcoin that hold better than others, and that we're going to be shocked to see how it falls if it breaks those levels. And that the ratio of 2x is going to hold consistent, meaning that if in fact stocks do fall, 10 to 15% more, that Bitcoin could in fact fall 20 to 30% more, and that's not unreasonable. That's not unreasonable to expect, depending on what stocks do. So let's just go ahead and apply that. Let's just give it a little bit of headroom and say like 20 to 30%. So 30% would bring Bitcoin down to $25,000. And of course, 20% would bring it down to $28,000. So $28,000 to $25,000 is pretty reasonable. Okay, if the stock market carries out the drop that that I've laid out here for you, based upon an argument based on the weekly EMAs. Let me go ahead and put those on. And by the way, the prices that you're looking for are here on the right side. This is just an indicator. Based upon the weekly EMAs, where of course the NAS 100 often comes back down to the 200 EMA and is incredibly overheated. just really, it just had been really overheated, and so it would have the power to push perhaps even lower. If we're just going to be extremely modest about it and say that that Bitcoin tracks the the NAS 100 the most closely, which in my analysis, I do believe that the NAS 100 is probably the best one to compare to Bitcoin. But other people will be using the S&P, others will be using, other, indices when they compare it to Bitcoin. But for me, I think the NAS 100 is probably the closest because I think Bitcoin is basically trading as like a tech meme stock. It's just bound to the stock market and the tech sector. And so if we see the NAS 100 coming down to its 200 EMA, then probably Bitcoin's going to go there, and that would be around 28K. And I think that's going to be our best case situation is around 28K, something like that. And perhaps if we get a little bit of a wick lower, you can see like these dips, they tend to be getting lower and lower. Started off pretty high up here, lower, lower, lower. And then this one may actually get, maybe halfway below this 200 EMA, in which case this 15% may play out. And so we could reasonably expect $26,000 Bitcoin, somewhere in that neighborhood. This is the most conservative model, I think, okay, based upon this hypothesis. On the other hand, we do have these other indices, for example, the Dow Jones, which have been extremely sloppy in the past, and they can break their EMAs considerably, right? So here you see the Dow Jones breaking all the way. I mean, this is its 200 weekly. It just gave up its life, right? It wiped out. Let's measure this. That was 4,400 days worth of profits in this wick. It wiped out, right? So, like 10 years or so of profit got wiped out in that dip. And that was just in 2009, right? 2008, 2009. And so, yeah, I mean, these things are possible to happen. And if these other markets do have one of these catastrophic cascades down, most likely it could pull all of the risk on assets, including Bitcoin, um, further than you would expect, further than what you would expect. And so that could potentially, see lower than 26,000. That's just what I'm trying to say, is that if you wanted to be very conservative, you might target 28 to $26,000. And if you wanted to consider that this may be some type of a black swan year where it's really about fundamentals getting broken in some way, then perhaps we could have these deeper retraces. And of course, if we look at the S&P 500 over here, of course, this is the one that I was looking at, that Wyckoff up thrust about a month ago or whenever, several weeks ago, when we couldn't break this resistance. I said, uh-oh, that's a Wyckoff up thrust. We couldn't break the resistance, and this pattern looked like it was distribution. And so, yeah, this one also looks like, although it's finding some support in this area, and we kind of have to wait until next week, it's still at its 89. If it loses that support again, and it looks like it might, then we're really going to be seeing a cascade potentially down to its 200. And then, as you can see, it has broken its 200 several times as well. And so if you're someone who is using the S&P, or you think that the S&P is a good model for Bitcoin, which a lot of your favorite YouTubers, because they don't do as much analysis as I do on these type of patterns, they tend to use the S&P a lot because it's just like one of those ones that people mention, like the S&P 500. It's like really easy to remember, right? And so they just copy each other and copy each other. They don't really do the hard work of comparing different indices. If you believe that, then you could see, of course, this market coming down, again, another 23% potentially, or even more, because you can see we even lose. Let me see. Do I have the 200? No, I have. This is the 300. I actually have the 300 on right now. So yeah, I mean it can come down really low. This is the 300 EMA, and I mean, pardon me, this is the 300 MA, and this is the 200. The orange one is the 200 EMA. So 300 MA is white, and 200 EMA is orange. And you can see the S&P even violates its 300 moving average, and it can do it significantly. So, yeah. Not sure, not sure what that would look like, but that could be potentially something like, even 33% down. I would be reluctant to call that or anything. I think maybe these levels hold up here. There's a lot of price action in this area, but yeah, I mean, it could look pretty bad if you're using the S&P 500. Let's see how much the S&P is down from the top. If it's about 20, okay, they're only 15. They're only 15%. So wait, that doesn't give me much confidence because if uh if Bitcoin is down 50% and this is down 15%, and we could potentially go double that down, then what would that be for Bitcoin, right? Like that would be pretty traumatic for Bitcoin. So again, personally, I don't believe that the S&P 500 is the best comparison. But if you're using the S&P 500 and you're considering these type of levels and how the S&P breaks its weeklies, then Bitcoin could be in a lot of trouble if the S&P proves to be the one that's the best model for it to track. However, I do believe it's the NAS 100, and that 28 to $26,000 range is your conservative range, as opposed to something crazy like the S&P. But who knows? We'll see, right? We can also talk about these type of models, the S&P mini futures here, which just gives us. I mean, I've just marked out like a more clear picture where we can see this type of possible range here, where the S&P might be able to catch itself as it often does on the 200 EMA. And so for that, let's just say it's 11%. So yeah, if that was the case, then of course, um, if what Bitcoin is down like 50% and the S&P is down 15%, then that's something like 3 1/3, right? So yeah, if it's going to, let's say, yeah, let's say times 12, right? Times 12 maybe. Then, yeah, I mean, that's pretty much in line, 40% down. So where is a Bitcoin right now? Of course, well, here, let me turn these off. Let's see, of course, we're right here. So 40% down would be 20,000. Okay, 20,000. And then let's say that, let's say for the S&P, that we actually did get to these lower levels down here. Of 20, I mean, it kind of wicks down below it, right? So This was a disaster. I didn't want to consider that. Well, let's just say 25, times like 3 1/3, right? Something like that. So, you know, something like 80, just say like 80 to 85% down from where it is, which would be insane. I don't even want to consider these numbers, but if we were to consider it, like, so this is why you better hope that Bitcoin doesn't track the S&P, right? Because that would that would have 5,000. That would have $5,000 Bitcoin. So again, I'm not sure if the S&P 500 is the best model to be using, but even just the most conservative model on the S&P 500, if the stock market continues to crash, would be $20,000 Bitcoin. And then if we use my favorite, the NAS 100, then we're talking about $28,000 to $26,000 Bitcoin. And of course, let's just say that the war, that Russia's invasion of Ukraine ends today. Then perhaps markets could just bounce, right? Like bounce up. If there's just some kind of good news, like maybe markets could just shoot up like they did in July, and everything would be hunky dory. Everything would be great. But we can't see that necessarily happening, and so we do have to consider these lower levels, which for Bitcoin itself, its 200 EMA is on 28,000, and so that's good confluence. Like 28,000 would be a pretty reasonable number to start DCAing in. If you think we're too high to DCA in at, then 28,000 would be a pretty good number to start considering to DCA in. And then if we ever did work our way down to 20,000, you know, uh, because you can see even the 300 MA for Bitcoin sometimes, gets tagged by these traumatic events in the market. Let's say that there's a traumatic event in the market and we come down into this area. Well, this probably is going to be curving up a bit. And so we could be talking about that like $18,000 area. And then if it's even worse than that, if some really just crazy thing, Russia launches a nuclear weapon or whatever, and markets just get, you know, scared to death, then perhaps the S&P's calculations could be correct. But all of this is starting to get really hypothetical, and it's not necessarily, it's not necessarily useful except to understand that you might want to start DCAing in once we start approaching these levels that are underneath or around the lows that we've made here in January, which is this like 33,000, right? Because under this area, it's going to be pretty good values. And if we get down to 28,000, we're really just retesting this area, some kind of backfill, some kind of, just retest. But again, like just be aware that there could be potentially lower levels depending on how the stock market's correct. And of course, if we go ahead and turn on our fractal, uh, you know, it's not easy to really think about this and how it should line up exactly, because this fractal from 2018, it's just different. It's just different than our current price action. And what it would suggest is that we may have a pump coming up, but I think that we may actually be in this area, like we could be somewhere in like this area, potentially also, right? And so perhaps we just continue to fall from this point, assuming that all of this is playing out the same as in 2018, but just at a much quicker pace. And if it is true, and I'm matching this peak, this kind of Wyckoff upthrust with this one, then, and this signs of weakness with this signs of weakness. So I have the Wyckoff upthrust and the signs of weakness matched up. And then I also have the major descent, marked lined up here. So I've contracted 2018 fractal into this tiny space. And what it would suggest is that we just continue to pour down. The bottom of this isn't really super relevant. It could be, so that's why I've marked it out. And the bottom of that kind of formation, that death cross from 2018, as applied to here to right now in 2022, would suggest also 18,000 to $12,000 as a potential price. We don't know if the magnitude of this drop would be similar to the magnitude in 2018, and this is actually and lengthened down as this got concentrated and matched the price action. So I have some skepticism here. I don't think that you should use this fractal to trade off of, and the only reason I'm including it is because it does have confluence with some of those numbers that we can calculate using the S&P 500 and using the NAS 100 as calculation bases, on the Bitcoin multiple as we were to drop off of a cliff. So just to summarize, conservatively, I think $28,000 is a pretty reasonable spot to, if you haven't DCA'd in yet, then to definitely consider start DCAing in, because we're going to be testing the previous lows from last summer. And historically speaking, we don't usually break the top of our previous all-time high. So any number below 20,000 is already breaking Bitcoin tradition, right? And these levels back here have generally been good levels for making profit. But if we put on my alpha origin channels, you can see that although it could take some time, it could take several months, most likely anything under $28,000 is going to be a good value in a reasonable amount of time as the progression of the value of Bitcoin continues upwards. Now, if you believe that Bitcoin's going to zero, like some people do, then that may not be a good risk for you. But if you believe that Bitcoin is going up and most likely will be 100,000 or 200,000 someday, it could take years, it could take a decade, nobody knows. But if you think that it's going up, which this is a very up chart, then potentially anything under 28,000 is a good value for DCAing in. And of course, anything under this $37,000, which is where I drew the line in the sand, basically, this a yellow line, which is the tipping point, and it does seem to be tipping over, like that was 100% accurate, right? Just happens to align with this one, right? Just happens to align with this one. Then you can consider that you want to DCA in on every level as we get lower based upon my alpha origin channels. And you can see that the first point there would be approximately 33,000, maybe 33,500. And then we have that $28,000, $29,000 area. And then 24,000. And then 20,000, 21,000. Let's say 21,500. And then this 18,000 And the 18,000 is interesting because it aligns with this red line, right? Where we get into the ultra super valuable zone of crypto. And you should actually hope that we get into that zone, because if we ever fall into that zone, you can just buy everything, right? You can just buy everything that's an actually good asset in crypto, right? A reliable blue chip, that has lots of funding to get through a crypto winter, because this is going to be the best value that could possibly exist in Bitcoin. And if we ever get to this type of a relative level, then, you know, just it would be just so amazing. It would be so amazing, assuming you believe in these assets. The worst case scenario that we had, right, based upon the S&P was approximately around 5,000. And you know what's insane is that's the bottom of the chart. That's the bottom of my chart. So, yeah, take that how you will. But if Bitcoin were to essentially go back to the lowest value, lowest relative value that it could possibly have while still maintaining this progression, then that would be approximately $5,500, $5,600 in this kind of Bitcoin death area, right? We don't necessarily want to go back into this area. It would destroy a lot of the market, and I'm not sure that um, that would be easy to recover from. So let's pray that that doesn't really happen. But if it does, we've survived it before, all right? It's just that the world is quite different than the COVID times. COVID times, they had a lot of free money to put into the system and just pumped it to heaven. And if this is really a correction, like if all of this was fake, because it was just fake free printed money, right? Just Federal Reserves across the entire world printing free money, and if this was all just just fake pump, just fake printed free money pushing up crypto and all these risky assets with all these stimmy checks and everything, right? All the free money loans that the businesses didn't have to pay back, all that scandalous stuff, Jerome Powell and all the Trump appointees, and then Biden continuing it, like they're both the same. Don't be affiliated with one party. They're not on your side. Something new is happening in the world, and all those boomers and their stupid parties of the past, it just doesn't make sense anymore. They're just hoodwinking you. They're pulling the cloth over your head. If you're tied to a political party, you're really an idiot these days, okay? Because those parties need to be totally rewritten. They have no idea what they stand for anymore. Okay? They really don't. Both of them. Both of them. And so what do we have here? A possible correction to this. And maybe the true path of this asset was just going to be right on this curve, right? And so maybe this totally is a reasonable area to check back on, right? Maybe there was nothing unreasonable. Maybe there's nothing unreasonable about checking back in this area, since that was the real price action before all the stimmy checks, before all the free money, before all the, artificial pumping of the markets. And sometimes just real has to be real. Sometimes you just have to come back to earth. Maybe this was never supposed to happen. You can say, well, it did happen, and so it was supposed to happen. But maybe it was really supposed to be something like this. We don't know. And then maybe we go, right, for an all-time high. And maybe this was just some type of fake out, which sometimes you see fake outs in the market based upon some weird factor like free money being suddenly injected by every country in the world at the same time. And then we just have to come back to reality and complete our wedge and our path up. Sort of like this one, right? Just do it here. I'm just making a hypothesis, right? None of this is to preach anything, uh, you know, real about the economy or what is happening or what may happen. It's just to suggest that underneath $28,000, I see it as a very good value and that you may want to leave yourself some money for these lower levels. And if we work our way back up, hey, good, we'll run back on. We'll make money either way. But if we keep falling, you may want to just decide which levels you want to keep money for, just in case. Just in case this is the return to normal for crypto, and then we have a run. You may want to get in on these prices, right? Guys, I don't want to go too long on this video. You can understand why I made these, these alpha origin channels. I just think it's really helpful for thinking about these type of things. I hope you like how I'm kind of color coding these things and that you can see it easily in your mind's eye to plan out. I hope you appreciate these type of fractals and understand that this type of fractal is not fate. It's just an exaggeration of this move. And that is, of course, based upon the weekly EMAs, right? Where you can see that we kind of follow the 200 EMA and also the 300 MA, where you can imagine this crossing over here. Just the 300 EMA doesn't have enough data to finish the line, just like the 200 ends here. And so, if the 300 had continued, we would have wicked down there. If we're in another trouble spot like we were during COVID because of some financial stuff globally, right? Supply chain crisis, because of the war in Ukraine, and because the COVID stuff never got fixed, and because of the free money, and so we're having a liquidity crisis on top of that. And then this is the return to normal from the liquidity pump that we had back here, and everything's just correcting, then you can see this area is quite realistic. I'm not being weird, okay? I'm not being weird. I'm not being mean to crypto. I'm not being, a doomsboy or anything like that. I'm literally just trying to be as realistic as I can. And I think so far I've kept you guys pretty safe, whoever has been following this channel. I think I've been pretty reasonable about the expectations, and so far they're all coming true. And then lastly, I just wanted to point out that, of course, if we do take a look at those, I think I can leave that on. Maybe I want to remove this, and that's okay. Let's go ahead and put the Gaussian channel on for the 5-day. Yeah, I do want to take this off. And you can see that we are starting to spill out. This isn't just wicks, right? These are 5-day candles. Right? There's 2 days left in this one, so that's a 3-day candle. 5-day, 5-day, 5-day. We're spilling out. This was just a wick, probably like 1 day, something like that. This is like almost 15 days. So that is spilling our guts out. And I told you guys this was going to happen. Even my hero trader Crown, he was saying, I don't believe in the Gaussian channel stuff. You guys don't understand it. I made a video showing why this made sense. You can check out my Gaussian channels video, the one that says how to get the best trade of your life using the Gaussian channels. And I'm telling you guys, like, be open-minded to some of the tools and some of the concepts that you're not familiar with until you've mastered them. I haven't mastered almost anything in trading. Okay, like I'm just a continuous learner. That's what I just say here. I'm not an expert. I'm a continuous learner. But when I find competence in something, I'm going to share it, and hopefully if I made any mistake, you guys can help correct me. But I think this concept has kept a lot of people watching this channel safe. If you understood my reasons and if you trusted me, that I wasn't lying to you. And if you took a look at the evidence that I showed, and including like the special videos like I made on the Gaussian channels, and you can see how we spilled our guts here, and that may be repeating. We spilled our guts here as well, but this was more of a traumatic formation because of the COVID era. And by the way, you see this dip down here in 11 and 12, like at the end of the year of 2019. This could have been a scam pump by market makers. We might have been already headed down for one of these type of drops, and they may have scam pumped it up knowing what was likely to be coming here. I don't want to, make too many conspiracies or anything, but I'm just saying, like the really wealthy people, the billionaires and the mega institutions, they get some advanced notice from their politician friends about what's being planned, not in terms of disease, but being planned in terms of uh, financial packages. And so, let's say that these guys are talking with each other, and they're very smart people. They're the smartest people in the world. They're all sitting, around talking on their phones or whatever, like, hey guys, this stuff is brewing, and most likely there's going to be big dumps in the market. We're already at the bottom of this Gaussian channel, and the government will definitely come in and, save the market if anything happens. What are you going to do? You're going to pump the market, and then you're going to sell at the top. And everyone else, everyone in retail, they're not ready yet. They don't have the insider information that you have, so you're going to dump on their heads, and then you're going to buy back in, knowing that the government is going to be providing liquidity for your corporations and for the billionaires and all these, different types of financial packages that they offered, knowing that. Because their financial futures, these politicians, are also tied to those institutions and to those billionaires and the donors and all of those things. And so we have to consider that this was a scam pump and that people knew what was coming because they were planning how to deal with everything that they saw happening in China in uh, in December and January. They knew that that could be coming to the rest of the world very soon, and these plans were already already made. These emergency plans were already considered, like how governments would react to pandemics and things like that. And it was hypothetical, but it was already able to be calculated by some of the smartest people in the world. Which we're not the guys buying Doge, okay? Like if you were buying Doge at the top right here, then like you got screwed, right? Or whatever you were buying, okay? Like I know Doge was pumped, but if you didn't know what you were doing, and in fact, if you bought Doge back here, you might have been doing actually really well. But you know what I meant? Just people buying like poo coins, things that didn't make sense to be buying. They bought at the top, and then all of these guys dumped on them. Even before, even before March came around. Why did it dump there so heavily before the mega crash? Because the smart money already had it planned. They already knew what was going to happen in terms of liquidity. And so they wanted to get in on these prices. They didn't want to be in at these prices, right? This is just a halfway drop. They wanted to be in at the bottom. And so, guys, I'm telling you, like this type of a formation, right, is really realistic. And if we do it again, don't be surprised. Like, don't be surprised. Let's see. On the 3-day, we can also go ahead and check out the death cross. And you can just see, right? I think, maybe we can look at the weekly death cross here, this 20 and the 55. They've now crossed. They've now crossed. That is a death cross. We are dumping. We've been dumping as I've been recording this video, if you haven't noticed the price on the side here. And just, exactly what I was telling you guys is playing out. And so I'm kind of walking you through what to expect. And yep, so this is the most clear image of the death cross, and you can see it right here. It happened approximately the time when this stuff fell over. But the big mess was, kind of over when the 20 and the 89 crossed. So let's see. That suggests we have some time to go. And then this cross right here happened before everything fell over, which it pretty much is happening as it's falling over. So a little bit of a front running. I thought we may have had a little bit more time. I thought we could have gotten at least one more bounce. You see all these little bounces in this area? Like bounce, 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 bounce. I thought we'd have a little more bounciness before we spilled our guts over. But maybe I made my videos and, some other people made videos, and maybe the market makers and all the smart people in the industry, they just decided they better front run it because, you and me, the regular people, are finding out. Like, we know what's up. We know what's happening. And so, yeah, all of our supports have been broken. I had this area marked out where I thought, as long as we're under, this red area, like there's not much hope. If we're over this green area, then there's pretty good hope. And you can see how it's related to this crossing. And you can see how this is related to this 89. But we weren't able to pump. We just weren't able to do it. We tried. You can see this wick. We tried. We got up to 40,000. We almost made it to the green box, but we failed. And so now we're slamming down. And I think it could be pretty bad, but 28,000 is where I would consider to start DCAing into the strongest projects. And then I would just leave myself money for different levels down. That's all. We're not, the game's not over unless we start breaking, like 33,000. And then if we break this, kind of 28,500-ish area, then we'll have broken the final market structure. Like breaking 37 already broke market structure. If people don't understand why, it's a bit complex, but we basically broke our higher lows from here. And so that's how I chose 37,000. And the fact that it coordinates with the break back here and this dump, you can see this ultra dump, right? This ultra dump right here. You see that? Boom. The fact that it just happened to correspond perfectly. And you see this rejection? Bam, rejected, right? Accepted, and then bam, bounced off. As long as we can get accepted by the yellow line, it's good news. If we get rejected by the yellow line, it's bad news. Rejected, boom, rejected, boom, rejected. I think it's going to be a boom, right down. Rejected, boom. Accepted, we, right? Accepted, we. Accepted, we. And if we ever get back up to this area, which who knows, it could be 47,000. You guys have heard me talk about 47,000 a lot. In fact, I want to put that line on here because you know what? That might be something that's relevant in the future. Let's see, what color should that be? Let's just make it red. If we get back over this, 47, 48,000, within this kind of time frame, then I think the bull market would be back on. Otherwise, I'm just going to be tracking my alpha origin channels, this yellow line, because it's been working perfectly. And again, guys, that's not to brag. I'm not just trying to be like some type of like an egomaniac or something. I just strongly believe that I've made a model that works, and if it works, I hope it can help other people. Otherwise, why would I share it, right? Like, I'm not making any money off of any of you guys. Like, if anything, using my time for these videos, you know, takes away from my ability to focus on trading and potentially making money. So I'm really here to improve myself, listen to any criticisms, which I've been getting through DMs or, on the Discord or on Twitter or wherever. And, in the comment sections, those type of things. And then also, you know, having some sense of accountability for this stuff as we go through the process. So again, this is a continuous learning environment. We're not here to say that one thing is right or one thing is wrong, but to listen to the arguments. And the argument that I would make is that this is a good model. And I hope you can find some value in it. And the fact that it predicted this and that it's holding true, it just validates this model in my mind quite strongly, which means that I'm going to continue to monitor this yellow line. And also this red line is going to be our maximum value zone. Anything under that red line, just you can pretty much go in all in with your crypto. Again, this is me talking to myself, not financial advice, but I could just go all in with my crypto reserves, whatever I have, without fear. I think without fear, and it wouldn't matter under 18,000, 18,000 to 5,000. Who cares, right? Who cares? Like this is going to be bought back up in my mind because I believe in these assets. I don't believe it's all going to zero. And I have a number of blue chip projects that I understand will hold value, thanks to my friend Crypto Reda and Crypto Athena and their group AR Collective, who help people sort through those type of things. But again, if I was using some of these other constructs like the Mayer multiple, you can see that we're also getting into that kind of high value zone. And it would also suggest, yeah, maybe 29,000 and 25,000. I guess it could dip lower because it's curving down. So maybe 28 and maybe 24,000, just like what I was telling you. Like this indicator, which I did not make, is suggesting something similar. But it's so variable. It just moves around. I just can't plan around this. And then the regression tool, because I don't want to just pretend that my idea only matters. This regression tool, it wouldn't have predicted that dump. This was right in the middle of two layers. This, you know, I just can't see any real points of planning on these curves for the logarithmic regression tool. So, I mean, this band sort of worked out right here, but it actually fell from above it. Like, pretty significantly above it, to be honest. And it also suggests something like 28,000, or it has 20,000 down here, okay? So this one is saying 28,000, maybe 20,000. But 28,000 would kind of align with the bottom of it. So we're all in the same ballpark, but personally, I think my model works better for planning. And I can very logically see where these things have fallen off the cliff, and it's being very consistent. I can see where things are overbought and where they're undersold. And then I can see areas that I don't really want to buy ever. I don't ever want to buy this pink zone up here, just too overheated. I can consider to trade this purple zone, and then I can consider to DCA in as much as I can during this blue, this cool zone. And if we ever get into the green zone, I can just go all in and feel happy knowing I've made a great investment, most likely. All right, guys, that was your alpha for the day. Stay safe. I know it's very frustrating. I know that a lot of you guys still have assets in the market. I don't want to leave you alone during these times. I always loved it when, the people that I talked to were available um, during these type of crashes and during these type of traumatic events, because emotions are such a big part of trading. But one thing that I would just suggest is we're already so low and we're starting to reach the DCA points where you should actually be starting to think about buying stuff because it's so cheap as we go down lower. It's hard to recommend to anybody to sell things at this point. We're already 50% down. I have no idea. This could be the bottom or this could be the bottom. We have no idea. And so you're going to have to take your own risk into consideration and your own tolerance for how long you can hold. Typically, you only have to hold half a year to up to 1 year. But you may want, if you're really overexposed and you're thinking about de-risking, you may want to consider that some stuff you may have to hold for 2 years before it ever reaches its value, and that within the time of 6 months to 2 years, some items may actually become worthless because some coins do die. Not the good coins, but the coins that are not blue chips. They don't. Blue chip just means that it has VC funding, it has venture capitalist funding, it has enough money for the team to survive a winter, to survive a recession. And if they don't have those type of funding, then during a down market, the team has to go get jobs elsewhere, and so they're no longer working on the project, and those projects and those coins die, right? So if you're in a lot of shit coins, if you're in a lot of questionable things, you may want to sell them and buy back into something that's a better project, right? Something that's stronger. And just don't forget to buy back as we start showing signs of a bottom, which would be the EMAs starting to cross in positive ways, because you'll regret missing the bounce back up if you do sell here. And right now we do have negative crossings, so it is safe to say that most likely we are in a falling pattern right now. I can't give you any financial advice, but I can leave you with those considerations on the macro. And as we take a look at the monthly, we can see that the monthly MACD is still very much in a corrective phase. We don't have any indication of it slowing down yet. It is super overheated. We can see that our RSI is starting to get stretched and it may eventually curve back up, but we're not there yet. We can see our Stokes are fully pointed downwards, and it won't even turn back up unless we suddenly pump to 55K, which seems unlikely. Let's go to the weekly. We are in a bearish control zone on the RSI and pointed straight down. We are not in a spot that looks like we're just suddenly going to turn around. Probably we'd have little indications like these little types of pops up, right? Like these little dents. If we're going to start to turn around, it looks like we're just headed down. And we're expanding our volatility, which means this move will probably continue for a little while. Not sure how long. And the MACD, our momentum, is to the downside again, and it could keep going down. We don't know how long it could keep going down. But as long as we're under 40,000, it's most likely not going to just turn up suddenly. Something will eventually make it turn up, but when we run out of energy. But when sellers just get exhausted of selling. But for right now, it doesn't look good. And so I'm not going to give you financial advice, but I've been telling you this for months. I've been telling you this since $59,000. I kept repeating this warning about get out here, get everything out here. And although I was hopeful we could break this level of 42,000, we weren't able to get over 40,000, and so we broke my yellow line. And once we broke that yellow line, you know what I think about that, guys. All right. So again, stay safe, and I'd say happy trading, but happy risk management. All right, guys.